Slayer to Lindsey Winter. He presents Hedgey, Hedgey.finance, a free token distribution and investor lockup blockchain platform that projects use to allocate tokens to their team and investors with full dashboards for issuers and recipients. So Lindsey, thanks for joining our meetup. Hope you are excited about Blast Layer 2. So we are hearing, listen carefully for your wisdom and your excitement. Oh, whatever you wanted to deliver us, your contribution is extremely valuable for us now.
Hey, thanks, Eugene. I'll make this short. I know there's a lot of other speakers. I'll probably spend most of the time just going through the app. As a background on us, we are a token investing investor lockup platform where when teams are launching or planning to launch, they can use us just to distribute tokens to their team investors and community. We're used by Cello Foundation. We're used by Arbitrum. We're currently distributing 50 million in grants for them to their protocols. We've distributed another 100 million for them before. Masa, we have 500 tokens that have used us. The app itself is free to use, self-service. You can just come and connect to it. I'll just show the app as I'm going, just to talk. But the idea here is when token teams are distributing tokens, we want to make it very easy for them to do that. And then I think some of the questions in the chat go into what you can do once those tokens are distributed. So if you're coming to the app, you can just connect your wallet. We're on Blast, obviously. If I wanted to issue vesting plans to my employees, I can come do that. It's very boring and basic, but it gets the job done. A lot of the stuff we've built over the last 3 years is been with a lot of larger foundations and DAOs. So it's very battle tested as far as just doing the job that on-chain teams actually need it to do. I'll actually do one since I'm on here. So if I'm coming and want to distribute things, you can upload a CSV for all of your employees and investors. I'll just do one since I'm on here. You click a few buttons. It's highly customizable if you want to have TGE unlocks or starting from 0 in 6 months, all the weird stuff that you probably want to do, it can do. And you just click a few buttons and that's it. And now you have on-chain permissionless programmatic releases of schedules. As far as managing people goes, once you've distributed them, you can obviously just track and see all of your vesting plans. Click different buttons. If you want to revoke vesting plans, you can do that and claw back unvested tokens. Or if you just want to automate your investor distributions and never have to touch it again, you can do that as well. And we're on the Blast Safe as well, so it's easy to use. We also do token grants, treasury locks, community claims. We just did one for Masa, where they had 70,000 people claimed locked tokens that will release over time. Our background, we started off in asset management. So we also built a lot of escrowless OTC swaps, selling covered call options on DAO tokens. A lot of just in the weeds kind of features and functionality there. We also, let me see if you see this, have a pre-token app. And this is for pre-token teams preparing token launches. This is everything from, coming to the app and doing your workflow, finding service providers and different things you need, mapping out your token cap table and allocations and distributions, secure address collection, basically everything that that teams need when they launch tokens or preparing to launch tokens, we've covered. So that's it for the product. I think people can get that. Talking a bit more just about the technology. Let me stop sharing. There's a question asked about our NFT structure and a direction we may head, or if we were curious about it. When tokens are distributed, they're held in an escrow contract, and it mints the recipient in ERC 721 an NFT. And that acts as their kind of ownership key to claim those tokens as they unlock. For employees, they can't transfer these just because that's the kind of structure that's most compatible with what HR teams need for their employees. For investors, you can make them transferable. So arguably, you could use these on borrowing platforms, secondaries, options, anything where you want like a collateralized token position, and actually like have a verifiable proof of that kind of token ownership or transfer of ownership. And so we use the ERC 721 standard now. There's a question, I think, about using ERC 1155, which kind of would give more functionality for like more like pro rata ownership and be able to deploy these more in a more liquid form, I guess, on different ecosystems. And I think that's really interesting. We've definitely explored it. We might go that route with some future products, but there's like a lot of like, I mean, we all build stuff. There's a lot of like cool things you could do that when you get into the weeds with legal teams, HR teams, compliance teams, tax teams, it creates more problems and doesn't actually solve the original job that these teams have, which is just having like a kind of secure automated system for managing these token allocations. So in our next kind of act, we do talk with a lot of like service providers and market makers who actually see the benefit of using our ERC 721 structure for a lot of these kind of financial markets for insider allocations. But we're just very slow to move technologies because everything you change, like even if you add like one benefit, it introduces one new kind of like risk parameter, whether it's contract or regulatory or tax. So we're very slow in that way. We try to be very boring with our solutions and get the primary job done and then explore what's possible after. So that's it. I'm going to keep it short on my end, but happy to answer any questions if there are some.
Absolutely. Thank you very much for being short, because being short means that you have an extremely clear understanding of what you've been doing. We have got two questions from team members. The first comes from Eugene from Envelop. Can you share your statistics on the vesting plans your clients use most often? What time of unlocking do you consider to be optimized?
Yeah, that'll all depend based on your allocation. So for employee vesting, typically it's a 1-year cliff, 4-year schedule. So 4 years total and 1-year cliff. And then it's a standard traditional cliff where it's like in that case, a 20% unlock at the chunk. And that's just like standard kind of like equity vesting migrating over. Investors, it can vary. And I think it all comes down to like what's on your legal sheets. Start. If you've done like a token side letter and you have a lot of optionality there, I would always push to have it match your employees. A lot of investors, especially in a bull market, will try to push you to have accelerated vesting plans, accelerated unlocks at TGE, and things that are very advantageous if you're a short cycle VC or investor that wants to just have quick liquidity. That's usually not advantageous to you and as a long-term project. And I think it helps kind of align like where their interests are. So my push would always be to have investors match what your team has. And again, vesting is like a carrot. It's to align incentives over a period of time. And the longer that goes out, the more aligned people will be for a period of time. There are trends like with KOL rounds and things where you have like a TGE unlock and some of this, and you may be tempted to do that. I would always speak with your regulatory advisors, whether it's your lawyers or someone else, because you can also, if you have unlocks before a year, you can introduce risk parameters from a regulatory perspective. That may not matter based on where you are and who your holders are and if you don't touch US or anything, but it's not something to be naive to. And so anytime you're having someone give you advice on your unlock schedules, it's important to just ask what their interests are and if this serves them and kind of fucks you, to be honest. Blunt, but it's true. And I'm happy. We have a lot of data on just general trends, and I can share a lot more granular detail if you just DM me on Telegram. We're always happy to talk through spreadsheets and talk through ideas. And whether you use us or not, always just tell you what's good to do in the market in general. So if you're a project and you want to do this, DM me.
Well, thank you. And one more question from the tech person, our CTO of Envelop, Max. He asks, have you considered the possibility of using ERC 1155 for token lockups? He means to get opportunity secondary trading of LUX shares. You've got the question.
Yeah, and I kind of answered that, but the risk you introduced there, and there's some projects that are kind of trying to do this, is you get into a huge nightmare from a regulatory perspective if you do that. If you start to create a purely liquid token that can trade on public markets with retail, it almost instantly turns your token into a security. And so you could do that, but you would need to spend a lot of infrastructure on actually controlling who is able to access those markets. And you also have to introduce risk parameters around it because you could fuck yourself if you launch a token and it becomes liquid on retail markets, especially during a lockup period. And you could also, if you're providing that service to people, you could indirectly screw them just by them not knowing what the potential was, and someone doing something in good faith, bad faith, ignorant faith, to just transform what your token is and introduce regulatory risk to you as a project. So yeah, we've absolutely looked at it. It's very cool, but again, it's one of those things where we've been building for 3 years, and there's a lot of lessons you learn. A lot of times it's like a cool idea that it would be very fun in like a kind of open world, but we don't live in that world just yet. And so you have to really consider like the long-term health of the projects who use you, and if that introduces risk to them.
Well, thank you very much. Yeah, I think it won't be an exaggeration to say that we have loved your product very much by the team, because this pain which it aims to solve is absolutely familiar to us. We're absolutely extremely familiar with that pain. So thank you very much for joining us, Lindsey, today, and have a good day. We promise we will be following personally your success, because really enjoy the product and your speech. And I personally enjoy that you don't hide your face on if you compare with the vast majority of Web3 guys. you have good marketing, right?
You're asking people to trust you with hundreds of millions of dollars, so people have to see you, know you're real.
Definitely. Sounds good. Okay, have a good day. Thank you very much for joining us today.